Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name's Manpreet and welcome to Cut to the Chase. Now it was a weekend of Ukraine-led headlines, and specifically the focus shifted to two financial sanction measures by the US and Europe on Russia over the last couple of days. The first was that they intended to cut some Russian banks away from the SWIFT system used for global interbank transfers and payments. And second were announcement of sanctions aimed specifically at limiting the Russian central bank's ability to use its foreign reserves. Now, leaving aside the undoubtedly significant impact of these measures on Russian domestic markets, we would read into any potential global market impact through two channels specifically. The first remains commodity prices, which we think is the key channel. Here, though, there have been no announcements on limiting Russian commodity exports specifically, and media reports said that the SWIFT ban could contain carve-outs to ensure Western economies can still complete payments for energy imports. Now, this is likely to limit financial market concerns over these recent sanctions, but having said that, we'd continue to watch quite closely as greater details of the SWIFT ban are made available. The second possible route, of course, is via global investor exposure to Russian assets. However, even here, Russia is now a relatively small part of major investor benchmarks, so just over 3% of major EM equity benchmarks and about 5 to 6% of local currency bond benchmarks. So those should help limit the impact to some degree. Now, from a market point of view, Friday did witness a strong rebound in equities and other risky assets across US and European markets in particular. What stood out to us is that the S&P 500 appears to be successfully defending key technical support levels that we'd highlighted last week. Now, investor sentiment and positioning surveys continue to be very bearish, though, and a number of reports noted that short interest in the Nasdaq index in particular had risen sharply. Now, all of these measures point to a more positive short-term outlook, at least for the next couple of days, regardless of the longer-term concerns and direction. Now, amid what's likely to be another week where Ukraine dominates the headlines, I think as investors it's important we don't lose sight of the fact that we're kicking off a particularly important week from an economic data point of view. This week, the US is set to release the key ISM manufacturing and services sentiment data. The ISM manufacturing series in particular has been easing recently from very high levels, so we keep a tight eye on how far that extends. On Friday, the US also releases the all-important employment data. Now, both of these are key as markets start to look ahead to the mid-March Fed meeting. The data points, we just talked about, of course, follow from last week, where a key broad measure of inflation, the PCE inflation measure, remained high, and personal consumption spending data confirmed the signal from retail sales earlier that consumer spending does remain very strong in January in the US. Now, that's in the US, but elsewhere, China's also set to release its own PMI surveys for February, where consensus is looking for a bit small downturn. Europe, of course, set to release inflation data for February, and Malaysia's central bank is scheduled to meet to set policy rates. So a very busy week ahead, but I think the key will be trying to look through what are likely to be still very loud headlines and focusing on what's really key, as we've described today. But we'll take a pause there. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks again for listening, and we wish you a happy trading week ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.